Most favored nation clauses in tax treaties to avoid double taxation. MFN clauses are active in 12 tax treaties, nearly 14% of Indian tax treaties. While in most tax treaties, future treaties signed by India with other states can activate MFN clauses. In 2 tax treaties, the activation of the MFN clauses can be due to the activities of the other contracting states. Condition of qualification of the third state with which the relevant contracting state should conclude a tax treaty to activate the MFN clause may vary. For example, in tax treaties with the EU member states, the third country should qualify as an OECD member, while in other tax treaties, similar qualifications may not be required, and any state can represent the third country. For example, India-Saudi Arabia tax treaty. MFN clauses have been litigated many times, and there are a plethora of judicial precedents on various issues related to MFN clauses. There are variations in the wording of the MFN clauses found in the tax treaties. Based on items of income covered, MFN clause has 2 important variations. Namely, clauses covering only passive income sources and clauses also covering active income sources. Most DTTs covers only passive income, mainly interest, dividend, royalties, FTS. These mostly covers both rate and scope of passive income. On the other hand, clauses covering active income are found in very few DTT and may cover deduction of expenses in the case of a PE, and/or for air transport and shipping income. United Kingdom DTT/Saudi Arabia DTT covers the deduction of expenses in relation to a PE. Philippines DTT covers income from air transport and shipping. Based on application modes, MFN clause has 3 types of variations. 1. Automatic application, where nearly 75 of Indian DTTs has with this variant. Example include tax treaties with Belgium, France, Hungary. 2. Additional notification duties. Few MFN clauses adopted by India specifically highlight the requirement of the notification. For example, tax treaties signed with Finland, where a formal notification between the contracting states is required for the application of the MFN clause. 3. Additional negotiation duties. Few Indian DTTs specifically state the requirement of negotiations. Example include tax treaties with Switzerland. Additional negotiation is required for certain items of income covered in MFN clause. Let's have a look at Concentric's case. On the issue of the date on which third state, i.e., Slovenia, should be OECD member, i.e., at the time of signing tax treaty with India or at the time of application of MFN clause. High Court ruling stated that the use of the wording, which is a member of the OECD, requires countries to be OECD members when source taxation is triggered in India and not at the time when the subject treaty was executed. On the issue of the requirement of separate notification for enforcing the MFN clause, High Court ruling stated that protocol forms an integral part of the tax treaty, and no separate notification is required for the application of provisions of the protocol. Circular, March 2022, main principles are mentioned in this slide. Binding nature of circular and way forward. CBDT circular binds the tax authorities and not the taxpayers. Courts are not bound by the CBDT circular. Penalty and prosecution risk should not arise for deductor/deductee for lower withholding taxes based on bona fide claim of MFN benefit by the taxpayers, where tax authorities denies the lower deduction. Taxpayers will have no option but to go into litigation where they would want to claim the beneficial treatment under the relevant MFN clauses.